Good afternoon. How are you today? My name is Dick Sicaro, and I'm an author of a book called In God We Trust, The Investment Business Not So Much. It was published a couple years ago. It was self-published by me on CreateSpace.com, and it highlights my 30 plus years in the investment business. A little bit about my background. I ran the state of Massachusetts pension fund. That was a $5 billion pension fund in the late 80s, 87 to 90. I was there during the crash, October 19th crash of 1987. That was interesting times. We had about $1 billion in cash on hand, and we bought some of the stocks right back. It was a tremendous buy. I mean, you had some of the big blue chip companies like Chrysler, U.S. Steel, that were trading around $96 a share, some of them over $100 a share, and they went down to single digits. So we all knew the government would not let those companies go under, and later down the road, they subsidized them through federal subsidies, and those stocks came back. As a matter of fact, those very companies bought their own stock back. So it was a tremendous buying opportunity. So the moral of that story is don't panic. Don't try to time the markets. Big mistake if you try to do that. And if you have some major corrections, you're in it for the long-term investment horizons, and the market will bounce back, I assure you. It's at an all-time high, the Dow, right now, over 30,000 points. So from managing the pension fund, I met managers all over the world, and I left in 1990 to pursue a career in the private sector. I became a vice president of marketing for an international firm that sold fixed income products and equities and stocks. And then I spent a couple of years with them, and then I became a pension fund consultant for the next 15 years or so. After that, I started my own business where I was a successful third-party independent marketer and raised several $100 million for investment managers. When I was a pension fund consultant, I advised to public pension systems. I had about 25 clients whose total assets were in the billion-dollar range. And from there, as I said, I started my own business for 10 years as a successful third-party marketer representing investment management products selling in the public pension funds. So a little bit about my book. I'm going to hold it up for you. There's the book there, In God We Trust, The Investment Business Not So Much. You see it has a very creative cover. I'll hold it back so you get a better picture of it. And my son actually designed that cover. And what that cover represents, it has Benjamin Franklin on the cross. It's a picture of Wall Street with the large American flag draped over it. And you have Greene Street and Wall Street intersecting. And you have the E Pluribus Unum insignia on the cross, which people don't realize, but it's the pyramid with the eye on top, of one eye. What that signifies is they're pushing for a one universal monetary system, and who knows if we'll see it. I know Europe had the euro dollar, and we'll have to wait and see. But Benjamin Franklin is actually covered with $100 bills nailed to the cross, atoning for the sins of Wall Street. And on the back, you have some notable quotes by me. I'll read a few of them. It's a must-read book by every high school and college student in the country if you were thinking about consulting and considering a possible career in the investment business. And it tells a little bit about my background, and some of the more notable quotes I have is there hasn't been a marketing representative that hasn't been totally wasted in the entire country one time or another. It's a crazy business. I went from managing billions of dollars, making hundreds of thousands of dollars, to zero overnight. It just shows you how volatile life can be in the markets as well. The inside of the book has about 9 different chapters, a little more, around 9 or 10. First one gives a history and chronology of my background when I worked for the Commonwealth of Mass. Chapter 2 starts with the start of my career in the so-called dreaded private sector. Chapter 3, the start of self-realization, being self-employed, and the ins and outs of the investment business. Chapter 4 is building your portfolio to achieve optimal diversification. Chapter 5 is different styles of investing. And Chapter 6 consists of where the industry is headed, what needs to change moving forward. So there were 6 chapters. However, I also have in the appendix a little history about myself, an investment article that I was featured in a national publication, and then the investment industry standard fee schedule, so you get an idea how much money managers should charge you in the institutional business. So in total, that is 9, I guess. So I was right on the money. Just a few quick stories. When I started my business, and it was in rough times. The SEC was cracking down on investment managers and third-party marketers due to some not above-board activities, pay to play, so to speak. There were a lot of scandals I talk about in my book, and it's quite fascinating. I recall one time the old Massachusetts Miracle when Governor Dukakis was running for the President of the United States. We were personally involved with that, where I walked a note of $350 million on a general obligation bond because the Massachusetts credit rating, even though at the time was AA or AAA, in reality it was just a little bit above junk bond status. And if they went for a public borrowing, it would have quickly decreased the credit rating of the state and would not look good for the governor at the time when he was running against George H. Bush for the presidency. So they borrowed $250 million in a general obligation note from the state retirement system, and I hand-walked it down to the bank, and we rolled it over for like 3 different 30-day extensions, and then it made the headlines, unfortunately, and George H. Bush said, there they go again, the Democrats raiding the state pension fund. And that was the end of Governor Dukakis' hopes to be president, and also the end of the Massachusetts Miracle. So it's stories like that I personally talk about, but now I'm going to give you some basic fundamentals and tips on how to become a successful investor. First and foremost, and this is, by the way, all outlined in my book, and once again, you can get it on Amazon.com for $9.95, and you can also get it on Kindle.com, the online version, for like $3.95 or $2.95, I believe, whichever you prefer. I've sold books all over the world. I sold them in Asia, being Japan and China, and I sold a couple copies in the UK, and I sold quite a few in the United States. And you can read the reviews, by the way, if you Google on Amazon.com. I have about 10 solid reviews of the book. So let me give you some investment advice, some tips, quick tips, and everyone should know and understand these tips. It's a key to a good, successful portfolio. First and foremost is diversification. You've heard the old adage, don't place all your eggs in one basket. Well, that's very important. And what do we mean by that? Well, if you put all your eggs in one basket and you drop the basket and the eggs break, they're not good to you anymore, are they? So you have to diversify your investments over a broad range of different asset classes and vehicles. So diversification accounts for 95% of your investment returns over the years. You could have the best managers in the world, as I spell out in this book, and you still wouldn't achieve your investment guidelines and goals that you set for yourself. If you can get 10% a year in your money, is fantastic. So how do you do that? Well, you invest, first of all, stay away from individual stock selections. You can put a small portion of your portfolio in that, but that's very risky. So you can diversify through mutual funds where you have to have at least 20 or so more holdings in your portfolio to spread the risk around. And you can pursue all the different asset classes, being equities, stocks, fixed income securities, which all over the place, from short-term treasuries to long-term treasury bonds. You can invest in corporate high-yield bonds, junk bonds if you want to take a chance, mortgage-backed securities, corporate bonds, which are more of a risk factor but also yield a higher return. And you have what we like to call a barbell approach. Just think of weights, the barbell with the weights on each side. So each opposite spectrum, you have a conservative end over here that has your fixed income securities and your short-term investments that got good credit ratings. On this side of the barbell, you have your maybe private equity, venture capital, opportunistic real estate that take a little more risk, small cap stocks, international stocks. Then in the middle, you have your core portfolio. So in theory, what you're looking for is low correlation between asset classes. What does that mean? When the stock market's up, the bond market's down, you're looking for that happy medium in between. So you don't want to go out on the limb and take a lot of risk. So diversification, again, counts for 95% of your return over the long run, like 25-year investment horizons. Then you shoot for an asset allocation that you're comfortable with risk versus reward. And the further out you go in that allocation, out to 25 years, the more probability you're going to hit your benchmark. That's a result of your investment guidelines and asset allocation that you choose. So 1 year, it could be volatile, and as you further go out, it smooths your returns out. So on average, you're getting, hopefully 8-10% a year, whatever you're shooting for. The other classic mistake people make is they get overly conservative in their investments. Besides market timing. Market timing is not successful. There's a statistic out there that over the last 10, 15 years, the S&P 500, if you were out of the S&P 500 for just a couple days during that period, it has a drastic impact on your returns. I think the number is like maybe 2, 3, 4, 5% differential. So you can't market time. There's not too many successful market times out there. So you stick with your long-term investment horizons. And you don't, again, want to be overly conservative because inflation, CPI, will erode your investment earnings and eat away at your retirement system. So those basically are the key fundamentals of the investment business. And you don't want to get in and out of the markets. You don't want to raise cash and then get back in the market. It's okay to do it. Maybe have about anywhere from 1 to 3% of your portfolio holdings in cash. The rest should be fully invested across that wide, broad, and spectrum that I've talked about. So those are some of the tips. You can read about in more detail in my different chapters, how you look at the efficient frontier, which is the optimal return of risk versus reward, the different styles of investing, and like I said before, some of the fee schedules so you're not getting ripped off by your investment manager. You can index your money, what the large pension funds do. That's a more conservative and less costly approach. Or you can go to active management. But hopefully you'll get a copy of the book. It not only talks about my little bit of about autobiography, how I started, how to get involved in the business, but I break out the different roles in the investment industry as well. Whether it is something you're interested in is marketing or portfolio management. It explains the different structures, what the jobs entail, what degrees you should get to help you pursue your goals in the investment industry. So hopefully you enjoyed this short version of the book. It's an easy read, by the way. I try to break it down in layman terminology. And one of the interesting quotes also that I have on the back of the book is one solid relationship can lead to millions of dollars in sales, which is true. It's a business that is built upon trust. And word of mouth spreads fast that you're a trustworthy individual and people will come to you. Showing up on time is half the battle, and if you don't show if you don't show up on time, you better know what you're talking about and at least sound like you do. That's just a joke. But anyway, hope you enjoyed this presentation I made. And once again, Amazon.com. In God we trust. The investment business, not so much. And as I said, that cover is quite provocative. I get a lot of responses to that. And my son actually designed the cover. So thank you so much, and hope you enjoy the book. And I hope that you get some mileage out of it. And I think it's a great basic understanding of the investment business without getting too complicated. And if you're pursuing a career in this, I wish you the best of luck, and hopefully this book helped you out. I also talk about some of the scandals that I was personally witnessed in the business. That's interesting as well. So take care, stay safe, and have a great day. See ya.